of new investments recently. Generally, I don't share my investments in videos here on TikTok because people are more likely to just copy instead of learn. The whole point of my channel is to teach you how to invest. I'm not a big fan of copy trading and copy investing for those reasons. It doesn't teach anyone anything. It makes people dependent on content creators. Okay, I bought the stock because I saw your video. Now what do I do? When do I sell it? It's going up. Should I take profits? That doesn't teach anyone anything. All right, so you get the idea. But it's kind of lose-lose because even if I make a video saying this isn't financial advice or don't buy stock in this company just because you see a video on social media, inevitably, someone's going to come up to me on the street or at the gym or in my DMs here on TikTok or Instagram and say, I bought that stock because I saw your video. So what am I supposed to do? Just not make videos about the stock market anymore? Have full disclaimers everywhere? You know, what are you going to do? So one of my newer investments, Splatterguard, is a little store I like to call Dollar General. Just came back. And some of the things that I picked up were sponges, that Splatterguard, cayenne pepper because I like it spicy, and a bunch of these brushes. There's another one somewhere else. This was $1. That's why I got so many. I'm a big proponent in investing in what I know and use. Recently, Dollar General has not done well. Look, they have a warning right here. The stock is down almost 30% in the last 12 months. So let's talk about some of the issues facing Dollar General. For starters, consumers have been cutting back as inflation and prices have remained kind of high. I mean, for example, the Splatterguard was $5. I mean, these were all $1 a piece. Let's see here. Cayenne pepper was $1. The sponges were $1. Everything else that I got was pretty much $1. Except for the Splatterguard at $5. But when you see prices going up and consumers pulling back, even at a place like Dollar General where still many things are relatively affordable, that can impact the stock. And there's a lot more competition now. I mean, there's Dollar General, there's Dollar Tree, there's Family Dollar, there's Walmart, there's Lidl or whatever it's called. There's Five Below. Add in that Dollar General has expanded. So in the midst of all of this, they've opened up some new locations that might be underperforming, which can drag down stock performance. And on the other hand, we can see that the stock is fairly undervalued when compared to their competitors or the sector on average. Dollar General is a $17 billion corporation. They're not just going to throw up their hands and go, well, oh well. The company is aware of all of these issues facing the company, and they're making active steps to make some changes. Now, whether those changes work or not are yet to be seen, which is why, for me, Dollar General is a small and speculative new investment. In other words, I'm starting small, and I'm only putting in what I'm willing to lose, at least until I can see that these changes have been made and are working. Other investors might say, hey, the stock was $150, and now it's like $82. Buy it now in the event that the recovery works. That's not how I like to invest. Now, if that's how you like to invest, do your thing. But I don't want to take a gamble on maybe. I'd rather buy into the strength. So yes, it's a small position now. And yes, I will buy more when the stock goes up. I know that sounds counterintuitive, buy low and sell high. I would rather buy into the strength of the recovery when I know it's working than roll the dice and say maybe they'll fix it, maybe they won't. My next investment is Elf. A couple years ago, my girlfriend got this huge package in the mail from Elf, and I said, what's going on here? What is all this stuff? And she said, it's their annual mega discount, and I just load up on all the stuff that I use throughout the year. And I was like, you like this company, you use this company, maybe we should invest. Now, back then, about 2 years ago, the stock was around $90 per share. Just take a look at their 5-year performance, up 545%. Now, I wanted to buy it somewhere around here when it was in the 90s. Look where it ended up going, and look where it is now. Now, you might be saying, whoa, what are you, crazy? Why are you buying it now? It was 90, then it went to 200, now it's 112. It's basically kind of back to where it was. Here's what I think is going on with Elf. I think they had a massive period of sudden growth. You can give credit to social media. You can give credit to the fact that they have these things called dupes, which is like they go and they look at the more higher end product and they go, well, we can recreate this and make it more affordable for people to buy dupes. Part of the sell-off that we're seeing could be that they had a period of virality through social media, which has pulled back, so sales have slowed down. Part of it could also just be profit taking. Part of it could also be the company now transitioning. You saw 545% growth. Maybe they're transitioning from a massive growth company to something more moderate, and Wall Street and the stock is kind of adjusting. So maybe ELF doesn't have that explosive growth going forward, but they'll still likely have moderate growth. Just take a look at ELF's revenue. In 2023, they did $578 million. In 2024, they did $1.02 billion. That's a pretty big jump. Now for 2025, they're estimated to do $1.32 billion and $1.56 billion in 2026. Wall Street analysts have a price target of $183 or 63% upside. Now the point of this video is not to say, just because you see a video on these things, you should go out and buy them too. The point is to say, hey, I use these products, I'm familiar with these brands, and I've done extensive research to make my decision. Now, I know what else you're gonna say. Well, you've already done the research. If it was good enough for you, it's good enough for me. What are you gonna do? Please don't, but I know someone out there is gonna do that. But if you want to learn, actually learn how to research these companies, because maybe you don't like Dollar General, maybe you don't like ELF, maybe there's a different company out there that you like Chipotle or Kava, and you wanna research them, this is what you're gonna do. All you have to do is go right here, click right here, find this template, click on it, watch all of these videos if you don't know how to use this template, then click right here, and there you go. This is your clickable template. You can fill in all this information so you can have a better idea on whether or not you should invest. All right, smash the follow. Thanks for watching. See you later.